Jim, tell America, what do we make of this?
We're done with it. We don't have to talk about it anymore. I mean, I think that they put themselves in a situation where if they didn't raise rates, our market would be down very big. Because if they didn't raise rates, it meant that there was something lurking that you and I and many others don't know. So they pegged it to employment. They got strong employment. They can do this. I think they're going to be commonsensical. It is kind of exactly what you would want at year end, in part because now you've got your big bad event done. You can come back and go buy FANG again. You can go buy Facebook, Amazon, Netflix, and Google, now Alphabet. That's what these growth stock guys want, and they got it.
They had quite a session today. Facebook, some of the others up in the range of 2%. But here's an interesting question, Jim. I mean, in a way, does this give further support to trades that have already been extended? Is there any way in which longer term this comes back to haunt the markets?
Well, look, I think that stepping back, you would say we can't keep the rates as low as they were when the patient was near death, and we've got to walk them back some way. I mean, my take is that there. I know I didn't hear a lot of this today, but I thought the Fed did a great job. I mean, I think they waited until they had an employment number that then covered themselves by saying, look, we got a pretty good balance here with that last employment number. We're doing okay. Look, if something really goes wrong, I don't think they're going to do the lockstep. This is a different Fed from the one that raised 17 times, even when things were starting to roll over. So what it does is allow us to go back and look at companies. So you looked at Honeywell and GE. They spoke today. They spoke and they said things are great, and they were rewarded. CVS, they said things are great, and they were rewarded. That was terrific. Stephanie Link, definitely right. The consumer product stocks went up because the rates aren't going to go up so quickly that their yields are therefore null and void versus Treasury. So there's a little something for everybody. I mean, do I wish they hadn't raised? At this point, if they hadn't raised, I have to tell you, I'd be saying, you know what, there must be some junk fund I don't know about, some bank I don't know about, some oil company I don't know about. Now I just kind of feel like, all right, let's go back to looking at companies.
What about oil, Jim, which has been pushing the market around, raising concerns, hitting the credit markets? And today had a horrible session, but stocks were still higher. What do you make of all that?
Yeah,
especially
I think they
if
were
the dollar's
swept up in the
higher.
S&P, Kelly. I mean, I think that the oil stock should have been down. The S&P had a nice move. You mentioned the illiquidity at year end. The sellers should come back if oil does take out that 35 level. I do not think that oil can bring down the economy. I just think in other words, that $300 billion in high yield debt, that even all of it defaulted, I think obviously there's 16 states that will be directly involved. I could say 5 states where you would see business go down to appreciably enough that it could affect the GDP. But in the end, look, the junk bond funds are as bad as they were before. The ones that have a lot of oil are now being talked about as being cheap by people who are trying to push them on you, trying to push our viewers to take risks that they shouldn't in order to get a little bit more interest. And look, oil is just not great versus so many other ends of the market, like the banks. I disagree with Stephanie on one thing, because Stephanie and I are old friends. That's why I mentioned her. Don't mean to just to constantly refer to her, but I worked with her for 7 years, is that I thought the banks acted terrifically in light of the fact that there could be credit risk from oil. And I think that the banks, when they did the prime rate, you should feel a little aggrieved. You're not going to get much more on your savings, but they're going to make more money on your savings. And they remain strong buys, and I think they can go up very substantially from here.
All right, and we'll come back to this in a moment, but those stocks also up about 2% today. Jim, really appreciate you joining us.
Always great to see you, Kel.
Jim Cramer, and you can catch more of Jim on Mad Money tonight at 6 p.m. He'll have more on the Fed move, plus a big interview with the co-CEOs of Chipotle as that company continues to deal with the fallout from the E. coli scare.